Hi, this is Fiha from FinPocket and I am back with the weekly updates. This week, KC 100 index gained 241 points to close at 47,198 points. The market remained volatile due to the political situation in Afghanistan and Pakistan being reclassified as a frontier market. Since the inclusion of Pakistan in the MSCI Emerging Index, Pakistan failed to attract foreign investors because of their small share in the major index. This week, MSCI has downgraded Pakistan from Emerging to Frontier Index, where Pakistan was a heavyweight. This move will likely improve the volume, returns, and foreign portfolio investment in the coming weeks. Octopus Digital, a subsidiary of MSCI Limited, marked Pakistan's IPO history by getting fully subscribed within the first 30 minutes of the two-day book building. The IPO was oversubscribed by 27 times. This shows the investors' confidence in the PSX market and the tech sector. Competition Commission of Pakistan has initiated an investigation on Hascol for creating fake financial reports for the acquisition of Vitol Dubai. Hascol purchased petroleum products from Vitol at high prices and sold them in the market at a cheaper rate to gain market share and dominance. For this, Hascol borrowed money from the banks and caused the loss of 98 billion rupees, the largest ever fraud in Pakistan's history. Hascol is also under civil and criminal investigation for defrauding investors and borrowers. Pak Suzuki Motor Company will be discontinuing its second-generation Swift variant in Pakistan after almost 12 years of its launch, while booking for the Cultus have also been temporarily suspended. Rumors are that Indus Motor Company, that assembles Toyota cars in Pakistan, plans to launch a special edition of the variant of the Toyota Corolla X. On economic front, the cement sector posted a healthy growth of 22.77% in August 2021. The total cement dispatches during the month were recorded at 4.34 million tons against 3.53 million tons during the same month of last year. In the effort to remove Pakistan from the grey list of FATF, the Financial Monitoring Unit of the government will work with FBR to continue inspections of developers and builders to ensure their compliance with the requirements of FATF. The oil marketing companies have requested the government to help address the issues of OMCs, which operate on regulated margins of less than 3% of the sales price. OMCs have been facing financial crisis, mainly owing to exchange loss, less margin, and heavy inventory loss due to COVID-19. And lastly, the country's trade deficit almost increased by 120% in the first 2 months of this financial year. The deficit is driven by higher import bills because of increased global commodity prices, including oil and gas, and depreciation of rupee. The dollar strengthened because local investors purchased dollars ahead of a deadline to encash price bonds worth 40,000 rupees this month. And that's it for this week. We'll now meet next week with more weekly updates. Allah Hafiz.